What is going on, investors? Back again. Time to talk a little bit about Electronic Arts. This is our first for the channel. We have not reviewed EA, so we'll take a look at it here. Ticker symbol EA. It's up in the regular session about 2.4%. You see in the after hours down 7.4%. Actually kind of interesting because you come in here and you see that guidance came in a little light. So for the key holiday quarter that's coming up, they're expecting bookings at 2.35 billion. Expectations were 2.39 billion. So they're either sandbagging or they're coming in a little light. But what's interesting from a shareholder perspective is they announced a new $2.6 billion buyback program. So that should be good. And here, look at this. First time in company history, a 17-cent per share quarterly dividend. Now, 17 cents, not that great, but when we jump into the earnings, we'll see, maybe there's some room for growth there. And now you do get a benefit of holding a stock like this as a, not only capital appreciation, but growth as well. We see here on the 6 month, the stock has performed relatively well. When we jump over the stock chart, we'll take a look at that too. This has been on a little bit of a roller coaster as well. We'll take a look. Maybe we're pulling into an area where you can buy EA Sports, and then you've got a little bit of, a dividend safety as well, and a stock buyback safety as well. It's kind of interesting, at least from a shareholder perspective. Now, just really quickly, just from a price to sales basis, I know that everybody's sales is a little bit different in the video game industry. Obviously, everybody's profit can be manipulated a little bit, but just from a price to sales basis, these all trade in a similar range. We see TTWO down here, that's Take-Two Interactive, at 5.5, and at the top of the range, you got Activision Blizzard at about 8 times sales, and you got EA kind of smack dab a little bit right there in the middle on this one. So, none of these stocks, in my opinion, from a price to sales basis, do look wildly overvalued. From a price to earnings basis, this is at 18 or 19 compared to other tech companies out there, and maybe even other entertainment and movie companies out there, not particularly overvalued, at least from that sense, and that might not take into account the 7% drop we're seeing in the after hours. Let's jump over the numbers here. We've got 3 months ended here, 19/20, and 6 months, 19/20. One of the reasons why the stock might be selling off just a little bit here, we see net revenue went from 1.3 down to 1.1. Investors don't like to see revenue go down. For the 6 month, it's essentially flat, almost dead on flat. And again, we are coming into a new console cycle. So you got the new Xbox and the new PlayStation. I don't play as many video games as I used to, but I know enough to know we're coming into a new console cycle. And certainly as you buy those, you're certainly going to be actively buying video games as well. Either the physical copies or more than likely now the digital copies. Cost of revenues came in at 286. We see this is actually pretty nice. A lot of their revenues must have flown to the digital area as well, because you see we dropped revenue a little bit, but these cost of revenues actually dropped nicely as well. So our gross profit actually not too bad in comparison. We made 943 and we made 865 in this period from the 6 month ended. Again, essentially flat as well. So we got other costs as well, research and development, marketing and sales, general administrative, some other just very small things here. So we came down to an operating income at 149. So what happened here? We did have some costs that looks like they went up a fair amount. Research and development, my guess is because you have the new consoles coming out, you probably had to redesign. Again, I'm not a game designer, but my guess is they probably had to spend a little bit more money than normal for those new games, because maybe there's some coding differences, maybe there's just some differences with the new Xbox and the new PlayStation, which I'm sure they've been working on for at least the last year or so, research and developing those games. We see just in the last 3 months, that cost actually ticked up quite nicely. The rest of these are relatively flat. That takes us down again to an operating income that went from 268 down to 149. Investors might be looking at that as well, seeing net revenue decline, seeing our gross profit decline, and seeing our operating income decline by quite a bit, actually. But from a net income perspective, we get some, looks like some income tax benefit. That's why I tend to focus on operating income. I know net income is the true bottom line, but it sometimes can be manipulated or affected by things that aren't actually the business the operating parts of the business. Not that net income is not important, not something that you should look at, but I I tend to focus here. Now, from an earnings per share perspective, again, they announced a buyback, so this diluted share count should start to trend down over the coming quarters and coming years. And look, we earned 63 cents in the quarter. And for the 6 months, we made $1.88. And like I said, they announced a 17 cents. You times that by 4, I guess you're close to, you're close to 60 cents, 70 cents. And so, that's not a bad, they've got plenty of coverage on that dividend, even in a year where it looks like they weren't firing on all cylinders over at Electronic Arts, at least from a revenue growth perspective, and then also an operating income perspective as well. Things just look pretty good to me in terms of covering this dividend and eventually growing it over time. Now, from a stock chart perspective, this one's kind of interesting. Okay, we've got a 50-day moving average that's kind of looping around here. It's obviously been trending up. When this stock takes a dump, boy, it comes way down here, but it tends to want to come back to this 50-day moving average. We see we broke through just briefly here in March, and then people realized, well, look, everybody's going to stay at home and play video games, and then boom, this stock shot up like a rocket. Look at this trend line here. I mean, this is about as vertical as you can get on a stock, and it probably pulled forward, in my opinion, a lot of the stock gains and a lot of valuation perspective in EA's valuation that, now we're seeing the stock starting to normalize. We see we made a high here, a lower high here. We probably made a lower high here. We see the stock is actually sitting dead right on where our 50-day moving average is here, right at 119 per share. And so where I saw it is I drew these trend lines in here. I'll zoom us back out just really quick. I'll show you. I like these trend lines a little bit. We made a little bit of a top here. It was some support here. It was definitely some support here as well. We made a top here and it got rejected hard here. And then once we solidly broke out from this top, it was off to the races. So I actually like this level, and then maybe even a lower level here on EA. So, yes, I think this 50-day moving average is going to provide support. If you want to step in, you like the dividend, you like the buyback, I don't mind you stepping in on this 50-day moving average. Look, it's still positive. Honestly, this MACD looks like it wants to cross back over. This RSI is starting to turn positive. Everything in the shorter term is actually looking pretty good. I want to keep you in mind, I'm on a weekly time frame here as well on this stock chart. But, if you want to be a little greedy, if you want to be a little patient, down in the 115 range is probably where I first would want to step in. Again, we'd be hitting a very well-defined area of support there. Further down into that range, probably 104, 105. Anywhere in this box, I'd feel way more comfortable than maybe up here, because again, we're making lower highs on this stock like we showed the uptrend. We are in a pretty relatively defined downtrend on this stock as well. And until it wants to pop back up over here, well, look, it's going to probably continue to trend down until they start executing this buyback. I mean, if a $2.6 billion buyback and 17 cents per share dividend doesn't get investors excited, then things are probably going to trend down with this stock in the shorter time frame. And by down, I don't mean by huge amounts. Probably, I would guess, into this range. But look, from a fundamental perspective, with the new consoles and this company being in a leading position, especially with I know I've referred to them as EA Sports a few times during this video, because that is a lot of their bread and butter, is a lot of their sports games like Madden and FIFA and like that. So those titles will be epically popular on the new consoles as well. There's absolutely no doubt about that. So that's EA Sports trading off here in the after hours, but looking pretty good. Overall, it's not one I would be running into. I think if you want to build up a portfolio, what I would do is try to mix in all these games so you kind of capture it all. Maybe even get a little Microsoft, a little bit of Sony. If you like the video game sector, I do from a longer term perspective, what I would do is just put all the stocks in that sector: EA, Microsoft, Sony, Take-Two, Activision. There's probably a handful of that you could throw in there as well, and then just build up a small little portfolio of it, buying a share or two here, depending on your budget. If you got a big budget, you might be buying 100 share lots or whatever it is, but build up in a $30, $40, $50,000 portfolio, you've got 1,000 or two of it inside the video game sector. And if they're starting to pay dividend and do these buybacks, look, that's shareholder friendly. So I like that as well. So that's EA Electronic Arts for you guys. Hopefully you guys are doing well out there. Let me know in the comments below what you're doing with Electronic Arts these days. You like that dividend? You like that buyback? Let me know. We'll be back again soon with more videos. Good luck with your investments.